Welcome back to All Things Money. I'm David Blain, and during the first two segments today, we were talking a little bit about health insurance. We talked about the Section 105 health reimbursement arrangement that can be used to pay for qualified medical expenses. And last segment, we talked about the health savings accounts, or HSA, that are a great alternative out there. These two plans, in my humble opinion, are very underutilized. And if more people are aware of them or use them, I think it would help the overall state of healthcare in America. It puts a lot of the power back to the patient. They become very cost conscious of the money that they're spending. Anyway, if you missed those segments, visit us on the web, www.dlblain.com. In a week or so, we'll have the archive of the show posted there, and you can listen to it. We also have other information about myself and the company on the website. Our phone number is 252-633-0107. If you have any questions or comments, feel free to give us a call. Our email, of course, is allthingsmoney@dlblain.com. And during this segment, typically we do some viewer mail, email. This week, we're going to tackle one of the questions we get a lot. Is there light at the end of the housing tunnel? Many clients and many people, viewers, listeners to the show on 94.1 FM WNBU and cable TV 10 in New Bern have been writing in and asking about the housing market. And so I thought I'd take a few minutes during today's show to cover that. At the beginning of the year, we expected housing activity to tumble with the expiration of the home buyer tax credits, which in fact it did. Home sales have plunged to around a $4.4 million annual rate. All the way back at the end of 2009, they had jumped up to around $6.75 million rate. So the temporary credits that were there have caused home sales to plunge to a new 15-year low. So you can see there the nature of the temporary stimulus. I'm not a big fan for a lot of these temporary stimulus things. So housing is fundamentally, just like all economics, whether it's stocks or bonds or a car or a pack of gum, it all comes down to fundamentally its supply and demand. And so we're going to talk a little bit about those factors. Supply and demand, for those of you, give you a little economics refresher, is what sets prices in the free marketplace. Of course, the government can step in and confuse the process, as they did with the tax buyer credit. But when the markets are allowed to perform normally, it's a supply and demand equation. So the first thing we need to look at is what exactly is the supply. One of the things we look at, the Census Bureau every quarter provides estimates of the housing that's out there. We can see how many owner-occupied houses there are, how many renters there are, how many homes are for rent, how many homes are for sale, and things like that. And so when we look at the supply out there of houses, depending on the statistics you come away with somewhere between $1.5 to $2 million excess supply of houses. If you look at another way to look at it is housing is fundamentally determined by a couple of things, but one of them is what we call household formations. There have to be people that want to move into houses. And so typically, once a family gets into a house, they may trade up as their family grows. As they get older, they may trade down, but they're still within the overall housing market. They may go from a single family house to a condo. They may buy a second home, but they're still in the housing market until they pass away. And so the new buyers for housing to help absorb some of the excess supply comes from what we call household formations. It's essentially young people either coming together and getting married, or having a child, but what we call household formations is where a lot of the new demand for housing comes. And when we look at that number, we see currently that there's about 17%, and this comes from the housing per household. There's about 17% more housing units than households. If we look at that number, it's in excess of about 2.5 million. Interestingly, the CBO, which is the Congressional Budget Office, also came out with a report in 2010 and indicated the housing supply was in excess of 2.5 million. So we think, the number is somewhere around, 2 to 2.5 million excess homes based on things like household formation and other things. So there's only two ways to decrease this excess supply or to absorb the excess supply. Is number one, reduce the excess supply, or number two, increase the demand. As we saw in Detroit, I don't know if you heard this, but Detroit, the mayor there, or maybe not, it's maybe not the mayor, but somebody in Detroit, they're actually knocking down homes. There's so many neighborhoods with so many foreclosed and vacant homes that their solution is to knock down the houses to reduce the supply. So that's certainly one way to reduce the supply, is to tear them down. And so when you reduce the supply, the demand can help lift the prices. And the second way, obviously, to absorb the excess supply is to increase demand. As we mentioned, household formation is very critical. Household formations have been going down significantly. We've seen a slight uptick in 2010, but through this recession, they have declined significantly. Now, the good thing is the population born between 1986 and 2005, kind of what we call the echo boomers, is actually predicted to be a larger generation than the baby boomers. And so they're expected to be surged by 2 million people between 2009 and 15, and so that should help to absorb some of the housing. Anyway, we're running out of time here, so when we look at the excess supply versus demand, we think that the excess won't be absorbed until between 2012 and 2014. It's still going to be another 2 to 4 years to absorb the excess housing. Well, that's all the time we have for today's show. We hope you enjoyed it and that you'll join us again next week. For All Things Money, I'm David Blain.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.